What's up you guys, and welcome to the Crude Crypto YouTube channel. And I got a really interesting video for you guys today because Bitcoin again climbed up to the 19.2k level and already showing a 90% increase from when we last left the 20-week moving average. So therefore I would like to congratulate all the Bitcoin holders and all the people who have been buying Bitcoin over these past couple of years, because we're already almost back at the all-time highs. But before we bring out the champagne, I would like to address and warn you guys about the risks we could see at these levels and what commonly happens with the Bitcoin price after we make such moves. In this video, I'll be doing a broad analysis on Bitcoin and I will show you everything you need to know about a potential coming pullback. I'll be going over all the different resistance levels, the RSI and MACD, and my own bull buy indicator. After this, I'll be showing you the pullback levels, which in my opinion are great accumulation levels. If you're already excited for the video, leave a like and subscribe. If we just take a look at price for a second, you can already see the significance of this move. And from my past experience and previous price history, you can see that these moves are not sustainable and commonly followed by a correction. At first, I'd like to identify and clarify at which level we currently are. If we take a Fibonacci retracement from the top or the all-time high to the bottom from the cycle, we can see that we currently are at around a 100% retrace of the all-time high. If we then also take a Fibonacci retracement from the $14,000 top to the trend line support, which is the ascending log trend line, we can see that Bitcoin is currently finding resistance at the 1.618 Fibonacci retracement, which is also a common retrace level for price action. You can also see that after we break $20,000, there isn't much resistance left until $25,000. As I said, Bitcoin is currently finding resistance around the 100% retrace and the 1.618 Fibonacci extension, which are both common retrace levels. To obtain more information and insight if Bitcoin could break these levels, we take a look at the short term. Taking a look at the short term, we can see that currently Bitcoin is also showing bearish RSI and MACD divergence, which indicates impending price action to the downside. And therefore the chance of breaking this level decreases according to these two indicators. As I explained in the previous video, if you didn't watch it, please go watch it. I'll leave a link down below and show a notification. As I explained in the previous video, Bitcoin is currently in an accumulative bull market. And as we can see, we are currently already trying to break out of this accumulative bull market, which in my opinion may be too soon. To answer the question if we have enough strength left to break the $20,000 level, I'm going to do a macro analysis on the RSI on the current cycle and the RSI in the previous accumulative and exponential bull market. At first, if we take a look at the RSI, the relative strength index, we can see that the RSI is currently at 85. Normally when the RSI is above 70, this indicates that the asset is oversold and therefore we could see some further downside in the future. If we take a look at the previous accumulative and exponential bull market cycle, we can see that the RSI finds support on 55 after each small rally. In the previous cycle, we saw that the RSI could reach levels of around 90 before majorly retracing in the previous cycle. However, if we take a look at the cycle before that, we could even see RSI levels of around 100. This whole area is nuclear territory, in my opinion, on the RSI. You can also see that currently the RSI is finding resistance on the downsloping trend on the RSI. As I tried to explain in the previous video, the cycles are lengthening and also the returns are diminishing, and therefore also the fluctuations are reducing over time. Therefore, I do believe that the maximum RSI each cycle could be reducing over time. This would, however, not be a linear trend, because then this trend would eventually cross really low RSI numbers like 50 or 40, which again is not realistic. But again, if we take a look at the previous cycle and the current cycle, we are seeing that we are currently at similar RSI levels. And each time after we reach these RSI levels, we saw a major reduction in RSI and therefore also a reduction in price. If Bitcoin will break $20,000, we don't have much room left on the RSI to grow. And therefore the chances of a future pullback would be increasing even more. If we take a look at my own log bull buy indicator, we can see that we are currently at orange levels. If we take a look at the previous accumulation phase, we can see that after we reach orange colors, the price would then commonly retrace and find the same or even lower prices than when the orange color is indicated. You can see after we see the orange color, then we come back and we find a green color, which indicates a great buying opportunity. And here again, we saw an orange color after majorly overextending in this move, then also came down. Here we saw the orange color, also came down to the 20-week moving average. Here again, we saw the orange color at this candle here. Immediately after that, we came down. Here again, after the orange color, we came down, showing also both green indications, which indicates a good buying opportunity. And as I said, currently we are at the current prices, we are also seeing these orange colors, which could indicate a better buying opportunity in the future. If we take a look at the past 10 years of this indicator, we can see that we also are facing resistance at the orange overextension range. The biggest and probably most interesting question to answer right now is, if Bitcoin were to drop at this level, where could we go and which are smart accumulation levels to accumulate Bitcoin? As I explained in the previous video, which I do recommend you watch, I explained that the 20-week moving average, the red line, is the bull market support. Since I think we are in an accumulative bull market, I do believe that the 20-week moving average is the lowest price we could close on if we were in this market phase, which I do believe we are. Currently, the 20-week moving average is at $12,440, but you have to keep in mind that the 20-week moving average is increasing over time. Let's take a look at the previous accumulative bull market cycle and the percentage difference from when we left the 20-week moving average and when we again found support after it. In the first instance, we saw an increase from 20-week moving average to 20-week moving average after the move of 64%. In the second instance, we saw an increase of 32%, and in the third instance, we saw an increase of around 50%. So overall, we see an increase of around 30 to 50% from the moment when we left the 20-week moving average and when we again found support on it. To determine the retrace levels, I'd first like to draw a Fibonacci retracement from when we left the 20-week moving average to the current top. After drawing the Fib nodes, let's take a look at the 30 to 50% increase from the 20-week moving average from the point when we last found support on it. We can see that if we would increase 30% from 20-week moving average support range, we would reach around the 0.618 pip retracement for a retracement. I do think that this is a really strong retracement level, and therefore that price would most likely bottom out at this range. We can see that also if we increase to 40%, we reach the 0.5, and around 50%, we reach the 0.382 pip level. Because of this, I would identify these three levels as the main pullback levels of where Bitcoin could bottom out. These levels are the $15.9 thousand US dollars, the $14.8 thousand dollars, and the $13.7 to $30.4 thousand dollars. Another risk that we could be facing is the December crypto dip. And around December and the New Year's, we often see crypto retrace or dip because of tax laws. Because people have tax obligations to pay over their cryptocurrencies in the new year, and therefore they would often sell it before the new year starts. As we can see, at around 2014, we saw a major dump. Around 2015, we saw some fluctuations, but generally a stable price. In 2016, we saw a small dump. In 2017, we saw a small dump. In 2015, we saw the end of the bull market. In 2019, we did see a small retrace, but mostly a consolidation or a sideways price action. In 2020, we saw some bullish price action. And currently, we are again facing this time of the year. In this video, I made a lot of comparisons between the current accumulative bull market phase and the previous accumulative bull market phase. But I do need to address one major difference between these two cycles, because in the current phase, we are seeing a lot of institutional adoption. And therefore the trust in Bitcoin is significantly higher than the previous cycle. This majorly stimulates the overall market sentiment and bullish price action. As you can see, I'm currently on bitcointreasuries.org, where you can see all the different publicly traded companies holding Bitcoin. Currently, around 4% of all Bitcoins are in the hands of publicly traded companies, and this is only the publicly traded companies, not even including the private companies. In this video, I've provided you with a lot of information, and I think we can say that Bitcoin is likely to correct at 20,000 US dollars, or even harder or starker at 22 to 25 US dollars. In this video, I've provided you with pullback levels, which I personally think are great accumulation levels. The higher we go, the more likely it is we correct. And I'm not trying to scare you. As I showed you in my previous video, I think we haven't even scratched the surface of what Bitcoin's price is capable of. Having that said, I hope you guys enjoyed this video, so please leave a like and subscribe if you haven't done it already, and I'll catch you in the next one.